Welcome to the Persuasive Mindset, your podcast guide to mastering the art of persuasion by exploring its role across diverse fields through in-depth conversations with experts. I am your host, Dr. Serena Mate-Delondra. Today, we have the pleasure of speaking with Prof Cédric Tille, a distinguished economist whose career bridges global finance, policy, and academia. He has served as an economist at the U.S. Federal Reserve Bank of New York, a member of the Swiss National Bank's Bank Council, and he currently teaches as a professor at the Graduate Institute in Geneva and at UniDistance University in Switzerland. In this episode, Professor Tille reflects on his journey from aspiring fighter pilot to being an economist, sharing insights on Switzerland's role as a financial safe haven, the nuances of negative interest rates, and innovative strategies for teaching diverse learners. As well, we dive into the power of persuasion in policy and education, exploring how he connects complex economic ideas to everyday life. He also offers practical advice for students and early career professionals on building adaptable and impactful careers in economics. As always, a central theme in our conversation is persuasion's role in effective communication, and Tille emphasizes making ideas clear and relatable. Thus, whether you're passionate about global finance, education, or career navigation, this episode is for you. Now, let's dive into our conversation with Professor Cédric Tille. Enjoy! As we start our conversation, could you please tell us about your current position and also briefly, what is your academic and professional background?
Well, I'm a professor of international macroeconomics at the Graduate Institute for International and Development Studies in Geneva. So I teach to our students at the master and PhD level. I've been here since 2007. Before that, I was for 9 years an economist in the US Federal Reserve, more specifically the Federal Reserve Bank of New York. In addition to my main job at the Graduate Institute, I'm also teaching a bachelor course at the UniDistance University of Switzerland, which is based in Brig in Valais. So it's a university that serves for people who, for whatever reason, do not come to regular universities. This could be people who already have jobs, so it's a fairly different format. And policy-wise, I've been for 12 years, between 2011 and 23, on the bank board of the Swiss National Bank, which is like the management board. So always with a foot also in policy making.
Speaking of Distance University, or also known as UniDistance, could you please explain how does it actually operate?
So it's purely distance. Most of our students are Swiss, but it's also open to foreign students, classes in French, or you can do classes in German also. Now they have done some reform of the bachelor program, so now you can take classes in both languages. And we also have their master program in data analytics, more from the point of view of being a user as opposed to a producer. And that's in English, actually.
And who is the target audience for this university?
The UniDistance is really aimed at people who are already in employment. For example, we have several people who are elite sports people, and then they need training for once the best year of the sports career are behind them. But we also have people who are just fresh out of high school and for whatever reasons don't find it convenient to attend a regular university. And so they offer bachelor, and these are like full-blown bachelor, so it's not because it's at distance that it would be any different in that respect, far from it. And there's also master programs, the economics, but the biggest department there are psychology and law, and that's the economics, and there's also history, and there's also programs in artificial intelligence. There's a whole flurry, so the website will tell you much more about this.
I'd like to shift to the topic of finance and to ask your opinion on how would you describe Switzerland's role in the global financial system, and also what types of challenges does the country face today?
So Switzerland is one of the small open economies with a high GDP per capita, financial and trade integration very high. In the Swiss case, it takes many forms. Banking, obviously, is a major form. So Swiss banks are leaders, especially in wealth management, and not just in Switzerland, but actually globally. This is a traditional niche of excellence of the Swiss banking system. It also, of course, does other forms of banking. Switzerland, surprisingly enough, is very important in commodities. We don't have oil, but we trade in it. So it's a hub of commodity trading. which is actually quite a big component of the Swiss balance of payment. So it's one of the specificity of Swiss data that you have to be aware of when you use them. For instance, Geneva or the region of Zurich are hubs for that for various historical reasons. It's also a center for pharmaceutical and chemicals. More than half of the Swiss exports of goods are actually pharma and chemicals. We usually think of watches, they're important, but actually not such a big part at all. So it has a big role there. With this role comes challenges, and I would really flag two. The first one is our relation with our big neighbor, the European Union. So far the Swiss have been quite good as having their cake and eating it at the same time. They're tough negotiator, but from the EU it's been for several years. The idea is we have this bilateral agreement system, but which was always conceived as being a temporary step. So from Brussels, the idea is more like we should have a good agreement for good. Be it membership or something else, that's something that we'll have to vote on. It was negotiated for many years. Unfortunately, the Federal Council stepped back into submitting it to the population, which I think was quite unfortunate. But it's important now for Switzerland to be clear where do we position ourselves. Doing a kind of a special deal, and we talk about it every couple of years, is not so good for investment. You want to have a sound footing of where you stand. And there was a time where Brussels was quite understanding with a special case, but that time I think is gone. Being treated as an exception can only go so far. So that's the first big challenge. On which basis are we going to put our relation with our biggest trading partner? And it will always be the biggest trading partner, even though North America or emerging economies are grown up, but the European Union is next door, and that's a fact. You cannot do anything. The second challenge is really in the wake of the Credit Suisse debacle, but even more broadly, what is the Swiss vision for the financial center? What does this mean to be a financial center? It's not, in my view, necessary to have a big global bank. So this is not an element. We can have excellence in financial centers through wealth management, which is a very different line of banking work than the commercial bank. So there is really a need to be clear, because when we used to have a couple of big banks, it was one thing. Now we have only one. There was going to be a tightening of regulation. Very soon the Swiss government will announce the new rules for UBS, but having only one big bank, which is twice the size of the economy, even though it used to be even bigger than that, but still, is something that I view as dangerous. So there is a need for clean. Of course, the bank says, rightly so, that if they want to compete in many lines of business, they have to have a certain size. But then there is a question, can a small country really be behind a big global bank? And especially a big global bank that has domestic activities, because banking is very heterogeneous. If you think of banks that do foreign wealth management out of Switzerland, should they unfortunately encounter some serious trouble and disappear, it would be a hit in terms of job, of tax revenue, but they don't do any commercial activity, meaning mortgage loan or loan to firms in Switzerland. So it wouldn't be so bad. It wouldn't be pleasant, for clear. But for UBS, then you have the two elements, the domestic activity and the global activity are very linked, and that's a source of danger. So these are, to me, the two big challenges that we have to confront.
The Swiss National Bank has said that negative interest rates remain a potential tool. Can you please explain what does that mean?
The SNB has said that this is a tool they can use. They've been very clear that they'd rather not have to. It's not something they enjoy doing. Now, to give a bit of context of that what the bank sets is what we call a nominal interest rate. So that's a return on a franc. But you have in economics what they call the real interest rate, which essentially corrects for inflation. So it's a price of a goods today in terms of a good tomorrow. That real interest rate is not set by the central bank. It's really set by the real side of the economy, meaning productivity, growth, demographics, etc. What we have seen in advanced economies, including Switzerland, since the 1980s, is a very clear downward trend. So there's a whole very rich literature on that. Many elements that have come is it can be related to demographics. So with the aging of population, we save more. If you save, it's a higher supply of saving, so the price adjusts, the interest rate goes down. There's an element also of a need for safety, because the interest rates that are going down the most are the interest rate on safe assets, like a Swiss government bond. Now, what is the risk of the Swiss government defaulting is tiny. Okay, or the day it happens and everything else is gone, pretty much. So there is this demand for safety, and people accept very low return on Swiss bond. I mean, the 10-year bond, even now, is 0.3%. Bear in mind, long-term inflation in Switzerland, the middle of the S&P target is 1%. So people treat the Swiss franc as they would treat a bank safe. A bank safe, you put whatever valuable you have, the bank will charge you, and you're okay with that. The Swiss government bond is a bit the same. So you buy it, you get a low return, but you're okay with that, because that's the price of safety. So we have these structural factors out there, which are very deep-rooted factors. And then, so we had negative rate until 2021. Then came the big inflation increase. And then interest rate with high inflation went up. But I've always been convinced that the structural features were still there. So once the inflation was behind us, we will go back to a territory of low rates. And that's where we are now. Okay. Especially for Switzerland. It's much less the case in the US, but then there's a much bigger debt. There's a lot of uncertainty, including on US government debt. So that's another situation. But now that the inflation episode is behind, well, we're back confronted to the structural factors of demographic, a need for safe assets, which is even more pronounced now than it was. And so people are really willing to pay to hold the Swiss government. Against this background of low structural rate, you can think of the interest rate that the central bank sets as basically moving around that trend. Okay, so sometimes there's a recession, you lower the rate, sometimes there's a boom, you increase the rate, but you're going to move around that structural interest rate. And as it's low, well, then it doesn't take much for the central bank interest rate to go in negative territory. And people often think that negative interest rate is crazy. That's kind of a pathology. Okay, it's actually not the case at all. Sometimes you say, well, if an interest rate is negative, isn't it like my wage is negative? The answer is no. The equivalent of a negative wage would be an interest rate of minus 100%, meaning you lose everything. Okay, so an interest rate of minus 0.2% means you keep what you put in minus a fee, so to speak. And if we think of a real interest rate, it's very standard in economics to have negative rates. Again, the interest rate is the price of a franc between today and tomorrow. Well, if you think of microeconomics, when we think of the market of apple and oranges, nothing said that an apple should be always more expensive. It's a bit the same thing. It's unusual because on average, given that we like to consume now rather than later, there are features that say that the interest rate would on average be positive. But there's nothing absurd about an interest rate being negative. It's unusual, but it's not absurd. The question that comes then is it effective as a policy? Does the policy transmission work the same when you are at negative rates than a policy? There's a lot of research on that, and so it's debated, but my take on the evidence is that it pretty much works the same. Okay, so there's nothing fundamental. Now the question is, there is a point where the interest rate will be so low that people would say, forget it, I'm keeping it all in cash. Okay. We usually thought that it was at zero. No, for household, it probably is. I mean, if I start being charged an interest rate on my account, I may get a couple of 100-franc bills and keep them in my house. Just be careful not to forget where you put them. And so, now, of course, if you're a firm and you're talking about a couple of millions, you cannot do that. You're not going to go with a truck and get or you want to have the security that comes with it. But there is a level where you will start considering things. So there is an limit. There's always also been concern, and if interest rates are negative, financial intermediaries say, we need to make a return, so we're going to go buy a very risky thing that we don't necessarily understand. So that's why there's also, in parallel with the negative rate, the regulator is very involved to prevent a bank from taking too much risks that we'll end up paying 10 years from now.
Speaking of safe assets, what does a safe asset mean, and how is that concept changing in today's global context?
In general, definition of a safe asset is something you don't really have to think about. Okay, so take a government bond from a country where there is no default risk. Okay. So say, okay, I park my there. If they tell me for 10 years they will give me X%, I know this will happen. Okay. It may be in another currency, so I might still have an exchange rate risk, but I don't have to worry about losing my money. The Swiss, the bond like the German or even the French government bonds are seen. The US bond, the treasury market, I should maybe say used to be seen, because one of the big development we have, and it's really a fundamental difference now over the last 2 months, is that markets are starting to look at US government debt as maybe not that safe after all. Okay? And not so much because of the debt level, that's nothing new there. And the US is a big economy, they could raise taxes if they wanted. It's more a concern about dysfunction of the policy making. And when you have possibility where in the law that is now in front of the Congress, say, oh, maybe there would be an option to tax foreign holders of government debt. Well, if you tax being foreigners, it's not so different from a form of default. So there's a lot of concern. That's why you look at the interest rate of government US bond, they actually remain relatively high. So we're starting to see a risk premium on US debt, which is really unheard of. And that's really a challenge for a country like Switzerland, because people say, well, the US is not so safe, so let's move somewhere else. Hold on, we're talking about a lot of money. You would swamp the Swiss government bond in a day if you were to really move. So then should the Swiss issue more debt? I certainly think that we can afford to have more debt. Now, I would not argue that we should go to 100% of GDP debt or something like this. But we may be a bit too popular for our own good. And that's always a challenge of being a safe haven. When things are delicate, people come to your country, but that means that your exchange rate gets stronger or you need to have very low interest rate, which usually is fine, but there could be no limit on how low you can go. So that makes the life of the Swiss National Bank quite delicate, actually.
How does the Swiss banking system compare to the US model, and what broader lessons can be drawn from Switzerland's political and economic structure?
The Swiss banking system is much bigger that's compared to the country. It's more oriented towards the need of wealth management. Trade finance, US banks also have a lot of investment banking, which some Swiss banks went into and didn't really turn to be such a great idea. And it's not to the extent that they have. One thing that is similar in the two countries, but maybe more pronounced in Switzerland, is the extent of decentralization, if I think of the system. And I think that's actually a huge asset of Switzerland. That, especially at the political level, that a lot of the power is at the local level or the cantonal level. If you look at your taxes, 20% goes to the Swiss government, 40% to the canton of Fribourg in my case, and 40% to the town of Châtel-Saint-Denis. Of course, personal income tax is not the only revenue, but that gives you a sense of where the power lies. And I think that it hardwires a sense of pragmatism, which to me is very central. Also, it gives the Swiss a sense of empowerment. We're not in a country where things are decided in a faraway capital where they don't listen to us. And this lack of empowerment is a golden for any populist movement and things like that. So the pragmatism of the Swiss, we always say that when you come with a great idea to a Swiss, the first thing he's going to ask you is like, how much is that going to cost? So we have this pragmatic side, which, okay, sometimes it's a bit annoying, but I think normally it takes time for things to be decided, but once they're well rooted. So decentralization, which is more pronounced in Switzerland, is, I think, a great idea. It makes for a fairly slow process, so it's not perfect, far from it, but it ensures that things are viewed pragmatically and with a lot of long-term grounding.
You worked for almost a decade at the Federal Reserve in New York City. I'm curious to know, what was the work culture like there?
The working culture, at least at the Fed, was this culture of encouraging the dissent, so to speak. So we were very much encouraged to come with points that were not necessarily in line with the Fed. Of course, as long as it stayed internal. I very much remember when one of our presidents was Mr. Tim Geithner, and when became Secretary of the Treasury. And the idea was really everything like, tell me what I haven't seen. Tell me what I don't know. And this idea is like to encourage people to come with a different view, which of course you have to argue this view. You cannot just make claims like that. But say, well, if I think everything is going right, it cannot be. So something is always going wrong, and if I don't see it, it's even worse. So this idea of encourage people to disagree, and then of course, and the management has to make a decision. So you may listen to people who disagree, doesn't mean you will end up going their way. But I think it's a healthy culture. I think for any organizations, be it political, business, encouraging the disagreement is fundamental. Otherwise, you end up with yes people around the boss, and that never ends up well.
Has access to leadership in the Swiss banking sector become more diverse over time?
You don't have to be a captain in the army to be working at a high level in a Swiss bank. There was a time it used to be the case. The Swiss army were basically the biggest business club of the country, which of course is hugely questionable because you only have Swiss men doing military service there. So in terms of representativity, it was a horrible thing. So that's much less. You have now banks, you have a lot of people who are non-Swiss. I don't have precise figures. It's not clear to me that this is different from the US, or not to a material extent.
The US dollar remains dominant globally, and I'd like to ask, how stable is that position today, and also could another currency step in?
The US dollar is dominant, and in my view, will remain so. It is dominant in many financial activity, in use in international trade. This dominance is being eroded a bit. For instance, there's a bit of a higher role of the Chinese renminbi in trade, but that's remained quite regional. The euro is playing a role in payment systems. The euro as a role is not as much as you would think based on the size of Europe, and the international role of the euro tends to be relatively regionally concentrated. Now, one thing that could happen, now that, as I mentioned, the safety of US debt is starting to be a topic of discussion. It's not like it's gone, but the fact that we discuss it is a huge change. Okay? There's an opportunity, I think, there for Europe to be providing the world with a safe asset. That there's a high demand for this safe asset. Used to be the US Treasury, now we have questions. So Europe could say, well, we're willing to issue Euro bonds and basically provide the world with these assets, this safety, safe storage of value, which is highly demanded. Should that be the case, then we could have a switch in some segment. There's a big literature looks at role of currencies. Fortunately, historically, we don't have many cases where currencies change. I mean, the big case is when the dollar overtook the British pound, and it's debated that it's in some segment it happened fast, not in other. I don't really see the U.S. losing that role. Shining metals such as gold, never been such a fan of them. The problem, there is a reason why we got out of the gold standard. Okay? Because essentially, when you have a currency, you want to do two things which are, in a sense, contradictory. You want a stable, long-term value of the currency. So that means you want price stability. Okay? You want inflation, not necessarily zero, but not so big and fairly predictable. Gold does that quite well. If you link your currency to a metal supply, we dig out gold regularly. There's never any big surprise. There can be historically, like Spain when they conquered Latin America and then had a big influx of gold, and they discovered the beauty of inflation right at that time. So the problem with gold, you cannot create it. And that comes to the second motive that you want to do with the currency. There are times where because of a crisis or historically when the economies were very much based on agriculture, you have times such as harvest where you need a lot of cash because there's a lot of payments to be made. Well, if you have gold, you cannot create this extra cash. So you don't have the flexibility of creating cash when you need it. And that's why under the gold standard, there was actually quite frequent financial crisis because there was not enough money to go around, so to speak. Now, of course, if you have the flexibility to create money, you may want to abuse it. And then I say, oh, how about I create a bit more, and boom, then you go in inflation. So that's why we invented independent central banks with a mandate of price stability as a way to get the best of the two systems. And of course, it's only an institution. Like any institution, any law, it can be undone. But I really caution against this, a bit of an illusion to say, oh, let's anchor on something physical and then we're okay. Well, maybe it will be okay for the long-term aspect, but in terms of flexibility, I mean, imagine if in 2008, central bank would not have been able to create all the money that was mandated, we would have had the Great Depression again. And we did have it in part of Europe, the periphery, but it would have been way more widespread. So the ability for central banks to be creative pretty much saved the world at that time. At least avoided a return of the 1930s.
You have had a long and distinguished career in economics, and in hindsight, was that always the plan from the start?
There was never a grand plan to study. So my dream job was actually to have been a fighter pilot. Nothing to do with economics, but I have glasses, I'm not an athlete, so that was gone fairly quickly. Okay. So, basically in high school, like in the college in Valais, we had a class in economics. I realized that's something I enjoyed, so I went to Lausanne, went into the econ segment. So there was a management track and then a smaller economics track. I went there, it worked well. And so thing happened, I wouldn't say by accident, but there's a bit of an element of that. And I think what is important is not necessarily to have like a big strategic plan. I mean, you want to have a sense of where you're going, but also to be attentive and reactive to whatever opportunity comes along. You may have something you never thought about. And it turns out it works, so don't be stuck into your plan. Be fairly nimble. So if a plan should be kind of a broad line, strategic, but not, I wouldn't necessarily recommend being stuck. Unless you're something you have a passion about, okay, that's fine. So I never had a passion about economics, to be clear. I enjoy it. I think I do it reasonably well, but it's not something I dreamed about since I was 12, not at all. So the ability to be reactive, whether US, well, when I was in Lausanne, and it was clear that I was doing okay. So I said, okay, maybe going to a doctorate. I was clear that I didn't want it to do in Lausanne. Nothing against Lausanne, I just didn't want it to do it the same place where I did my previous studies. And in fact, the decision to go in the US was taken, I would say, in about 72 hours. So I very vividly remember, so I was in the master there. I said, okay, I want to go to the doctorate. And some of my professors called me in their office and said, like, what do you want to do after the master's? I said, okay, doctoral studies, not in Lausanne, I don't know where. And the answer was like, they were very clear, all three, like, apply to the US. That's why back in 92, says that's where you'll get the best thing. But we have to start the application in a couple of weeks. So I thought, I remember there was the Tuesday, on the Saturday, I called my mom and said, you know what, Mom, in 6 months, I may well be in America. Okay. And she was like, okay, go for it. So it was, I hadn't really thought about it, but I said, hey, why not? So that's how I basically ended up applying there. So being open to opportunities you haven't necessarily thought about, I think because if you're too stuck in your ways, you will miss that. And don't stay always in the same place. If you have the opportunity to travel, by all means, I mean, understand that there may be other factors, professional personnel, that may make this more difficult, and that's perfectly valid to take that into account. But the ability to get a bit out of your zone of comfort, even if it means coming back to it after a few years. Just go see something else.
Based on your work experience, what are some of the most important skills, both in policy and in academia? So,
skills that are useful is to be able to go in depth at an analysis of a problem. With policy also, a skill that's important is to be aware and be able to communicate the policy relevance of what you do. There's some part of academia can be like ivory towers where people go long-winded dissertation of a topic that everyone else looks like, oh, what is it about? That I'm not a fan of. That's not my thing. Academics, remember, it's a taxpayer who pays our wages, so what we should do should be useful. It doesn't mean that everything has to have an immediate application, far from it. I mean, I'm very lucky to having people around me, many are not academics. So if I start going on and on a limb, I will quickly be reminded, it's like, hey, where are you going with this? What does this mean in the real world? And that, I think, is a chance to keep this real world grounding.
Looking back, what has been an unexpected turning point in your career, and what advice would you share with us from that experience?
Going to the doctoral studies, I think, was an inflection point. Probably when I was in high school, if someone had told me, oh, in X amount of years you'll be holding a doctorate, I would say, oh, nice of you to think so, but come on. So just, again, when things come that you didn't think would be possible, go for it. But it's always important to do that, while bearing in mind what is key thing is know what you want and know what you don't want. It's not because you could do something you should do it. Otherwise, you end up being pulled. So you have to find this balance on one hand, being open to opportunities that come that you wouldn't have thought of, while at the same time being still the conductor of your orchestra. Otherwise, if you put the cursor too much on being flexible, receptive, you'll be moved around by events outside your control. If you have too much onto I have my plan, I'll stick to it, you may end up in a dead end. So it's a very subtle balance to each. And one thing that can be good is to be surrounded by people who can give you an opinion. I have a very narrow circle of people whose opinion I tend to be more like I know what I want and that's it. So you want to have this set, not to be stuck in your ways, but you don't want also to always be in agreement with the last person you spoke to.
How do you define persuasion within your work, and also what role does it play in influencing decisions and also in shaping understanding within your field?
I wouldn't say having people agree with you necessarily, but making people aware of the point you're conveying. And what is important for that is to try to be very concise. And it depends on which audience you're talking. As an academic, I may be talking to a technically oriented audience. So, okay, there you're going to go and explain the model, the statistics you did, whatever. If you want to talk to a policymaker or even more so to the broad public, don't go there because they won't understand. And sometimes they say, oh, great, it looks serious scientific, but most of the time you likely say, okay, he's trying to push something past me, which I don't understand, and you lose the connection if you do that. So the key is to be able to really convey the message in a short term. I found it very useful to talk sometimes with metaphors that are useful, or with an image. People will remember that. So of course you have to think about the metaphor, but to give some an image to also, if you speak to a general public, you want to bring this in a connection with everyday life. You don't want to come across as an aloof academic, because that may feel good for the ego, but it's actually a disaster in terms of the communication. So to have a clear, simple story, one thing, for instance, in presentation that I do and I recommend to my students, so you should have one slide say, why do we care? The question. One slide that says what I do, and one slide that says what I find. And that's it. After 3 slides, if someone walks out, they should have the essence. Same thing when you do a communication to a media or something, boil it down to 3 main points and stick to this. People remember that 20 points they won't remember. And then trying to put too much information can be counterproductive. In terms of the technical level, again, depends on the audience, but I'm always very careful not to try to impress with technicalities, because I don't think that works. I don't think people and policymakers have ever been convinced by a very sophisticated argument. They're convinced by a clear story.
When teaching or engaging in public speaking of any kind, how do you ensure that your message connects with diverse audiences, both for technical groups and also the general public, without losing its impact?
You have to get a sense of what your audience is. Some classes will be more technically oriented, others not. But even if it's technical, to link this to current events, for instance, and say, oh, and this is like I showed you a model, but you may have seen that central banks do this or that. Well, this is how it connects to the model. So that, I think, is the central thing. And even when I take part be it a debate or a media event, I don't try to go technical. I think that people won't get technicality, but what people get is a connection. So you have to connect, and you have really to make sense. First, you have to connect in the sense of understanding the point you carry, but also connecting in the sense, okay, he's one of us. So say, this is why it matters for your everyday life, or something very concrete. If you say, oh, I'm just doing my topic in my ivory tower, even if you're clear, people will not connect with you. And then they will look at you like, okay, that was an interesting chit-chat he had, but whatever, let's move on.
Looking at the craft of teaching, I'd like to ask, how do you manage your time and how do you structure your teaching materials in a way in which you can ensure flexibility and also cover key points effectively?
When I teach, first of all, you have to tailor your set of slides or materials accordingly. I have a tendency sometimes to be more rushed towards the end than I was at the beginning. So, for instance, when I teach online, what I have next to me is a sheet with the various block of the classes and the amount of minutes. And I always keep an eye on it to make sure I'm broadly in line with that. Some classes, when I do one of the programs here at the Institute on the executive education, there's a class that is 3 hours long, which I cut with a very different type of activities. But I always enter that with a sheet where I have my timing of the various, which of course I never respect to the minute, but that gives you a broad sense. So it's like if you go take a hike and say, okay, it's going to take me roughly 30 minutes to get to that bridge and then 40 minutes to get to that point. So to do kind of your broad overview of the class, and then I have a rule that I count 2 minutes per slide, more or less. And then you structure your amount of slides within that. Leave also some spaces which you can skip. So I'll have some points. If I see I'm on time, I'll cover them. If I see I'm rushed, say, okay, these 3 slides, I will skip, but the rest of the presentation does not depend on them. So what you can do is like, okay, here's the key points in words in 30 seconds, but then I skip them. So I have part of the teaching which you can put aside if need be.
Some courses may take several hours at a time, and based on your work experience, I'd like to learn from you, how do you structure a multi-hour long course in order to make sure that you keep your participants engaged and also interactive from the start of the course until the end?
So definitely breaks. about every hour or so. Also alternate the form of interaction. I mean, even with breaks, if they have to put 3 hours of listening to me, they won't. And that depends on the audience. For instance, with an executive class, I can have them split in small groups. You give an assignment, something where they have to interact for like 10 minutes. You go around the groups, you engage. Then you have a general discussion. You can start with an online poll. Now we have so many tools we can use. I mean, you need some point where the professor speaks and the class listen, but you want to have points where they engage, and especially at the beginning. A good idea with the class is to start with an activity or poll or a sharing of experience. One of the best presentations I ever saw, it was not at all from an academic. The person started, and instead of doing his presentation followed by the question, he took the question first. He wrote them down. And then, of course, he had presentation knowing this kind of question would come, but then he could structure his presentation as answer to the question. I thought that was a very good thing. Now, you need to have a topic which is amenable to that, but you basically get your audience involved from the very beginning. So the putting question first is one option. What I like to do is I put something to debate on the chart, and you may split them by like 4 or 5, because if you have 20 people, put a debate, you'll have 4 that speak. So break them in smaller groups, have them interact, and then everyone can wait. So from the very beginning, they're engaged.
Based on your professional experience, would you like to share with us any advice or suggestions with junior professionals and also junior academics who are interested in pursuing a similar career path to yours?
There's several places for economics policy, like the Swiss National Bank. You also have short-term jobs, short-term meaning a couple of months or 2 years, as a research assistant, which is a good way to start early in your career. As a general advice, is to be very clear, that's on your flag, but know what you want and you don't want. Because academia is very long. So it sounds great, but be aware that you're going to do a master. Now, more people do a pre-doc. Then you have the doctorate. Then you have a postdoc. And you get an assistant prof job, which is not certain you'll keep. So this is not an environment where you'll have stability, okay? Which is fine. So it's not a matter of saying it's good or bad. It's just be aware of it. So that you have a moment where you'll be asked to move, which can raise to issue of balance of family versus work life, etc. So this is what it is. The policy will be a bit different. So again, be very aware what would involve to go in the various track, and then make a choice. 2 persons, one say, oh, great for me, the other absolutely not, and they're both right. So you want to be careful not to go somewhere because it sounds good. Just make sure do you be clear what it involves, and ask yourself, is this something I'm okay with or not? And if you're not, the earlier you realize it, the better.
And that concludes our conversation for today. If you enjoyed this discussion, please be sure to subscribe, leave a comment, and share this episode with others who might benefit from it. Until next time, be well!